crude oil because it was up to almost 78 today. So what are they going to say? Well, crude oil year over year is down $3 or something like that. Is that the headline? No, it's crude oil is higher. We're going to be paying more for stuff to get delivered. We're going to be paying more at the pump. You're going to be paying more for airfares, everything, because when crude oil goes up, they move prices up, right?
Pass it along right to us, John. It's a thing of beauty. Take a look at the 10-year and this big bounce that we've got to the upside, John. We've gotten back on up over that 4%. We've been there, and we hit 4.29 today. What's interesting is you got to go all the way back to December 4th to get a number where it is right now. I think that there's a little bit more room, and it's a possibility we see something closer to 4.5. We continue to get any kind of odd data that is way off. We were at 5% once. We could get there again.
You know what's weird, Pete, is that the CME tool that not only do they tell you, what the likelihood of the Fed moving, they actually, if you dig into it, you can see how many times they're predicting cuts this year. That tool is saying 5 this year. The only way we're going to be cutting 5 is if there's a disaster going on in the stock market, because the Fed has already said, Jerome Powell and the rest of them have said 3. They've been very transparent. They said 3. So if you and people that are putting money on the line are thinking that it might be 5, that means that you are in the David Rosenberg camp. You think we're going to see a severe recession and or a banking crisis. And New York City Bancorp, NYCB, and a couple of others are a little shaky right now, Pete. So worth paying attention to, folks.